Welcome to the technical analysis, the basic course. Today we are going to discuss about two candlestick patterns. Both are double candlestick patterns, and this is the part 12th and 13th video. So before getting started, make sure to subscribe our channel and watch our previous videos which are segregated according to the playlist, so there will be a rhythmic learning from your end. So without wasting further time, let's get started with today's video. Today we are going to see about the piercing candle pattern. So let's see. Okay, so piercing candle patterns, this candle look like this one, right? This pattern basically. And how to identify a piercing pattern? So the first candle is a red candle and the second one is a green candle. But if you see here, the green candle has gapped down actually, and it has closed above the 50% of the previous candle. So that is known as a piercing candlestick pattern. Now what is the logic behind it? We have to look for this pattern in a downtrend. So there will be a downtrend like this, and a red candle will appear and the green candle will close above the 50% of the previous candle. So in the first candle the bears took charge, and in the second candle the bulls gained the momentum. Now it is a trend reversal pattern and the reliability is relatively low from my end, right? I won't be trading on this kind of patterns and I find it very much vague. It doesn't give you any clarification whether the market is going up or market is going down. Okay, so let me show you why I think so. If you see, we have heard about bullish engulfing, right? This one. Now if you see, the red candle is pretty much low in this case. So in a downtrend, when a red candle is such low, it means there is a consolidation phase, and the green candle, the next candle, is showing very well momentum by the bulls. So that is a basic reason why I don't find a good trade in piercing candlestick patterns. So there is no trade setup in this. And let's see what is a dark cloud. Now these two patterns are pretty much popular with many traders. They might be using it in their trading systems, but I personally have not found a single trading system in which I can use this pattern. So let's see dark cloud. Now dark cloud is totally opposite of a piercing candle, wherein there is a green candle first and followed by a red candle, and the red candle closes below the 50% of previous candle. So as I told you, first is green, second one is red, and the red candle has gapped up. Actually, if you've seen, it has gapped up, but the prices has closed below the 50%, showing there is a bullish bearish force, right? What is the logic? We have to look for a dark cloud in an uptrend, and then bulls will took charge in the first candle and the bears gain momentum in the next red candle. It's a trend reversal pattern and reliability is again relatively low. We have another bearish engulfing which is much more better when compared to this dark cloud. So there is again no trade setup in this case. Now the next candle we are going to talk about is Harami Bullish and Bearish. So when you see this bullish candle, what does it look like, right? It is totally opposite of an engulfing pattern. So how to identify it? The first candle is a red candle, a big red candle, and the second one is a green candle. The green candle gaps up and it closes within the range of the previous candle. The only logics which satisfy a trend reversal pattern here is that the second candle has gapped up, but still it is in the range of the previous candle. It means it has not broken the high, that is this point of a previous candle, and the low of previous candle, that is this point. So still we cannot say that this is a good setup and you should trade on this one, right? What is the logic? We have to look for it in a downtrend, and the bears took charge in the first one. The bulls gained the momentum but has traded within the range of the previous red candle. So it's a trend reversal pattern and the reliability is extremely low, right? No trader is, I don't think so, there are no traders who would be trading on this particular candlestick pattern, right? And there is no trade setup again. The opposite is Harami Bearish, in which there is a green candle followed by a red candle with the same logic. So how to identify it? The first candle is green, the second one is red. The red candle gaps down and closes within the range of the previous candle. So still it has not broken the range of previous one, that is the high and the low point, right? So again the logic says that we have to look for it in an uptrend, and then in the first case the bulls has took the charge in the green candle and the bears gained momentum in the next candle, but it has traded within a particular range, that is the previous candle's range, right? It's a trend reversal pattern, and as I told you, the reliability is extremely low, and there is no trade setup whatsoever. So you can contact us on our email, you can WhatsApp us, you can follow us on our social cover. Our handle is TradewithNik and the links are given in the description below. Thank you and have a nice time. See you in the next one. Peace.